distinguished heads of state and government, distinguished ministers, distinguished representatives of observers, entities of the United Nations system, and other accredited intergovernmental organizations, representatives of civil society, excellencies, ladies and gentlemen. I call to order the second multi-stakeholder roundtable of the 4th International Conference on Financing for Development on the theme, Leveraging Private Business and Finance. Let me take this opportunity to cordially welcome all of you to this multi-stakeholder roundtable. I'm honored to serve as your co-chair, together with His Excellency Christopher McLennan, Deputy Minister of International Development of Canada. The summary of our discussions here today will be presented to the closing plenary meeting of the conference in the afternoon of Thursday, 3rd of July. Before we proceed, I would like to make some introductory remarks about the theme of our discussion today. Excellencies, distinguished delegates, ladies and gentlemen, it is both a privilege and an urgent responsibility to chair this roundtable on leveraging private business and finance at a time when developing economies of the Global South are navigating profound challenges, from climate vulnerability to human development inequities. Public resources alone cannot bridge the massive financing gap for sustainable development, estimated at trillions of dollars annually. It is private finance, including philanthropic capital working in concert with public policy, that can unlock development at scale. Our task is to identify how we can catalyze this partnership. In addressing today's core questions, let me briefly frame the discussion. First, at the national global levels, we need decisive action to unlock sustainable development. This includes strengthening domestic resource mobilization, deepening capital markets with SDG-linked instruments, embedding SDG-aligned incentives into national policy frameworks, and reforming the global financial architecture to better serve the needs of developing economies in particular. We must also advance fairer sovereign risk assessments that recognize reform trajectories and climate vulnerabilities. Second, to create an enabling environment for private investment in SDG-aligned sectors, we must focus on predictability, transparency, and policy coherence. This means improving regulatory certainty, offering SDG-linked incentives, and scaling up blended finance vehicles that de-risk private capital in critical areas like climate adaptation, affordable housing, and SME financing. Third, mechanisms that crowd in private capital must be mainstreamed, including credit guarantees, outcome-linked bonds, debt for climate swaps, and catalytic first loss instruments. Public funds must be used smartly to leverage multiples in private investment rather than substitute it. We must use today's dialogue to gather concrete recommendations that can feed into global financing for development processes and help deliver a future that is equitable, green, and inclusive. I now invite my fellow co-chair, His Excellency Christopher McLennan, Deputy Minister of International Development of Canada, to make his opening remarks.
Thank you. I would like to thank first my fellow co-chair, His Excellency Mohammad Aurangzeb, Federal Minister for Finance and Revenue of Pakistan. I will now proceed to make some introductory remarks. Excellencies, distinguished delegates, ladies and gentlemen, it is a pleasure to join you today at the 4th International Conference on Financing for Development. I am especially pleased to engage on leveraging private business and finance to accelerate progressing development finance. The reality is clear. Public finance alone will not be sufficient to meet the scale of investment required to achieve the Sustainable Development Goals. Mobilizing private capital is not just a complementary strategy, it is essential. Canada has long recognized this. Since launching the Climate Finance Program in 2012, we have been at the forefront of blended finance. In 2018, during our G7 presidency, we helped to establish the Charlevoix Commitment on Innovative Finance, laying the groundwork for more effective public-private collaboration. As today's discussion will focus on the policy actions needed to unlock private sector investment, I would like to take this opportunity to highlight how Canada is advancing this priority. Through the Sevilla Platform for Action, Canada is proud to be contributing to this important work. First, we have co-led the development of the Common Principles for Private Capital Mobilization, which represent a significant step forward in aligning global efforts to scale private investment in sustainable development. These principles are a critical step forward as they provide a comprehensive and ambitious roadmap for action. They identify systemic barriers such as fragmented standards, availability and accessibility of data, as well as highlight the importance of enhanced partnerships and ensuring the right enabling conditions for private sector mobilization exist. The Common Principles offer a roadmap for harmonized approaches, greater transparency, and stronger alignment between public and private actors. Importantly, they reflect a shift toward a system-wide approach that can unlock private sector at capital. But we recognize the principles alone are not enough. That's why Canada has also co-led the development of Scaling Capital for Sustainable Development. This initiative translates the Common Principles for Mobilization into practice. Scaled is a new, joint, public-private effort that aims to address complex donor requirements and lack of standardization in blended finance to reduce fragmentation and build a more enabling environment for private investment from the outset. We are proud to be working with donor governments in Germany, South Africa, France, and the United Kingdom, and private sector partners, Allianz, AXA, Caisse de dépôt et placement du Québec, and Zurich Insurance to uniquely create Scaled. The time for action is now. Canada is committed to leading by example through the Common Principles, through Scaled, and through our continued engagement in many global partnerships. Together, we can unlock the full potential of private finance to drive sustainable development. I'm looking forward to today's discussion and to hearing from all of you about your highest priorities for unlocking private sector finance. I am also keen to understand the barriers you're encountering in mobilizing private capital, and more importantly, how we can work together to achieve our shared vision and overcome these challenges and foster greater private participation. Thank you very much.
I thank my fellow co-chair for these remarks. We shall now hear an address by our keynote speaker. I have the honor to invite His Excellency Mahmoud Ali Yusuf, Chairperson of the African Union Commission, to address the roundtable.
Messieurs les coprésidents, distingués délégués, mesdames et messieurs, je suis honoré de participer à cette table ronde sur le thème « Tirer parti du secteur privé et de sa finance ». Le secteur privé a toujours joué un rôle central dans le développement. Son dynamisme sur le continent africain et son implication demeurent essentiels. Il est sans doute l'un des facteurs accélérateurs pour la réalisation de l'agenda 2063 et des objectifs de développement durable. Ainsi, nos États membres s'activent à créer les conditions idoines pour promouvoir les investissements privés. Par ailleurs, l'État de droit, la bonne gouvernance et la lutte contre la corruption font partie de cet environnement propice. Il est aussi évident que la lourdeur bureaucratique et des procédures de création d'entreprises trop longues ne favorisent pas l'émergence d'un secteur privé solide. L'autre goulot d'étranglement se situe au niveau du marché des capitaux domestiques. Il est primordial de renforcer le secteur bancaire qui, à son tour, doit proposer des produits financiers innovants. Cette démarche devrait nécessairement être accompagnée d'un système d'assurance et de garantie flexible, tout en faisant la promotion de financements mixtes afin de réduire la perception du risque. Mesdames et messieurs, le coût du capital pour les entreprises et les projets africains reste encore trop élevé. Il est impératif d'explorer des outils innovants de mitigation des risques. Faut-il le rappeler, l'Afrique se démarque par le dynamisme de son secteur informel et de ses petites et moyennes entreprises, en particulier celles dirigées par les femmes et les jeunes. C'est sur cette catégorie qu'il nous faudra mettre l'accent en matière d'inclusion financière. Des microcrédits en passant par le soutien aux start-up et l'investissement dans la littératie numérique. L'avenir du continent se dessine avec cette jeunesse pleine de talent et d'espoir, à travers une cohérence des politiques gouvernementales couplée avec une synergie avec le secteur privé et les partenaires au développement. L'on devrait pouvoir catalyser l'émergence d'un écosystème porteur de croissance et de développement. At the African Union level, we have been taking bold steps to support private business development with the African Free Trade Area. This ambitious initiative creates a single market of 1.4 billion people with a combined GDP of $4.3 trillion, offering unparalleled opportunities for businesses to scale, innovate, and thrive. The AFCFTA's private sector engagement strategy, coupled with investment protocol, aims to foster a predictable and transparent legal framework that encourages intra-African investment, in particular in key sectors such as pharmaceuticals, automotive, agro-processing, and logistics. Through the African Continental Free Trade Area, private sector investment and financing framework, we are committed to mobilize at least $1 trillion in investments towards critical infrastructure and industrialization by 2030, supported by mechanisms like the CFTA Adjustment Fund and strategic public-private partnership. To conclude, it is imperative that we urgently undertake deep reforms of our multilateral economic and financial processes. Our ability to harness the transformative power of private business and finance hinges on a global financial architecture fit for the 21st century, one that reforms debt and climate financing, establishes a conducive international tax architecture, and revitalizes the multilateral trading system. While these are significant challenges, our collective commitment, combined with the immense potential of private business and finance, offers a clear pathway to a prosperous and sustainable Africa. I am deeply convinced that by working together with urgency and shared purpose, we can transform these challenges into tangible solutions for our people, the planet, and shared prosperity. I thank you.
I thank the chairperson of the African Union Commission. I'm now pleased to welcome the distinguished presenters for this discussion. I also welcome Mr. Antonio Pinheiro Silveira, Vice President for the Private Sector at the Development Bank of Latin America and the Caribbean, who will moderate this discussion. I now turn the meeting over to the moderator. I look forward to an open, constructive, and productive exchange of views. Thank you.
Thank you very much, Mr. Co-Chair. Ladies and gentlemen, good morning. Pleasure to be here moderating this very important session on leveraging private business and finance. This is a central piece on all the effort for development, and we have here a list of very important panelists that will drive the session. We have today as panelists Her Excellency Mr. Neil Richenberg, Minister of Finance for the Kingdom of Eswatini. We do have with us Her Excellency Mrs. Ristisloi Metrayani, Minister of Finance and Development in Planning for Lesotho. Mr. Mulambo Jaime, Minister of Foreign Affairs and International Cooperation for Zambia, and Mr. Boris Titov, Special Representative of the President of the Russian Federation for Relations with International Organizations. Good morning. Mobilizing private investment, private finance, leveraging private sector. Modern development theory signs that development means leveraging a vibrant and competitive private sector that may be able to bring all together to increase in standard of life and happiness. The mobilization of private resources is a fundamental effort and the centerpiece of this modern strategy, and has to be leveraged by government finance, interaction investments, and official development aid. We have to take in mind that the central piece is the private sector, including here for promoting the SDGs. Right now, UNCTAD, a couple of years ago, had identified that the necessities of the countries exceeds $4 trillion to achieve in 2030 all the goals on the systems of the ESGs. So we need to focus on leveraging resources, domestic, foreign, and especially private, to reach this goal. Assets under management worldwide scale up for more than 120 trillion. This is a 2024 indicator. The big question is, how can a significant portion of this capital be channeled into investments with impact and development to promote SDGs? I think we have at least 3 pillars to build up this situation. First of all, already mentioned by the previous colleagues, make a huge effort on de-risking business affairs. This can be done, of course, with traditional instruments, and I call guarantees already traditional butter and bread instrument, but of course, it's not sufficient to stop here, although guarantees can leverage in 10 times each dollar that it's applied. But of course, we have to go beyond this. We have to take the opportunity to bring up our best minds in finance that were able to design very smart instruments during the first decade of this century that didn't end well, but they really have a lot of opportunities to redesign financial instruments. And here I talk about introducing financial innovations, not only for the risking, but to access credit in order to promote financing for all the necessities that we have. So the risking, financial innovation. Third, build up, and already mentioned, build up a business environment that is favorable for this triplet. Government, foreign aid to leverage private sector. CAF, on the last 4 years, have been doing a tremendous effort on that. We were able to have, in 2022, a general capital increase that was very substantial for our standards. It was $7 billion committed from our member countries to focus on green and blue economy, energy transition, and leverage private sector operations, go through subnational governments, and promote regional integration among Latin America and the Caribbean. We are quite engaged in this effort, and it's an honor here to mediate a discussion that can bring light not only for all the participants here, but especially for us in CAF to have new ideas. Having said that, let's go to the discussion. I will start with Mrs. Metaliani from Lesotho, and saying that Lesotho, like many developing countries, faces a common paradox: abundance of social and climate needs, but scarcity of private investment to meet them. My question, Mrs. Metaliani, from your experience in Lesotho, what regulatory policy reforms have you identified as priority to turn sectors into high social impact in terms of infrastructure, energy, and to attract opportunities for private investment? Please, Mr. Minister, the floor is yours.
Thank you. Thank you very much, moderator. Again, thank you to the co-chairs and a very warm welcome and greetings to fellow panelists, discussants, and participants. Honorable moderator, let me start by saying that to the question that you are putting to me, I wish to make my submission towards it through a narrative of the broader development goals, as well as broader perspective of developing countries in general, and the context of my own country, Lesotho, in particular, which I believe provides living examples of the subject that you want me to address. Let me start by saying that indeed, Lesotho, like many developing countries, faces a myriad of challenges, including climate vulnerabilities affecting energy and food systems. We are facing severe droughts, severe floods, and early frosts that come in frequently these years. They affect our food systems in terms of agricultural productivity, food security, and the livelihoods of our people. As we do this, as we experience this, we recognize there are challenges in the global systems, including the shaping of reforms that may unlock concessional financing, the debt relief mechanisms that do not work for developing countries, and innovative financial instruments that are needed to unlock financing to close the gaps for financing these developmental goals. Lesotho faces significant financial constraints like many developing countries. We are in a process to look for financing to meet our sustainable development goal commitments. Public finances and resources alone are insufficient, and private financing must be mobilized at scale. The Seville outcome rightly identifies strengthening domestic capital markets and enabling inclusive environments as key levers, and of course, partnerships with the private sector to unlock financing. In this regard, as we look into development, it is essential that we look at development as a global public good. It is the responsibility for all of us, public and private sector, and all stakeholders to take part in the efforts to develop our countries and save our populations. And in that, we look into developmental goals being achieved through partnerships with the private sector, the public sector focusing on policy, and the private sector helping to scale up the public financing that is available. We look into reforms in the financial architecture to service all and to be of service to all, developed as well as developing countries. We look into multilateralism as the key in all its forms for countries to partner and for institutions to work together. So priority actions from the Seville commitments for a country such as Lesotho are the following. We're looking into strengthening domestic financial markets. Lesotho is pursuing reforms in capital market development, including regulatory upgrades and digital financial institution initiatives. Of course, as a developing country, one of the important things is support for medium and small businesses. Our private sector is largely informal and MSME driven. So we're working to build inclusive access to finance with a focus on women and youth-led enterprises. We cannot leave behind blended finance and risk mitigation. Lesotho is actively engaging with development finance institutions and development partners to crowd in private capital, especially in sectors such as energy, in agriculture, in infrastructure, in health, in education, using guarantee mechanisms and leveraging on concessional windows where we can. In terms of policy actions, we are working strongly on structural reforms and policy certainty. Private sector leverages on certainty in public policy. We are improving our investment climate, streamlining business registration, enhancing investor protection laws, and providing predictability in our policy frameworks. In terms of financial reform is imperative. We in Lesotho have established instruments such as the public-private partnership framework to attract private investment in public infrastructure, especially in renewable energy and water. In green and inclusive investments, we are redesigning our tax incentives and other incentives and risk-sharing tools for green investments to attract investments in this sector. Fiscal policies are being aligned with our national determined contributions to promote climate-smart agriculture and renewable energy. Regulatory reforms allowing for easing private investment, including fiscal incentives, are underway, and we have introduced a number of incentives and subsidy schemes that encourage private sector and private players into the energy sector. These include off-grid space to cater for accelerating access to rural communities, and furthermore, our regulations have liberalized private investments in power transmission networks, including cross-border power trade to the neighboring states directly or through the Southern African Power Pool. I wish to highlight that Lesotho is accelerating investments in the Just Energy Transition Fund that is led by His Majesty King Letsie III, which is focusing on this private sector-led investment to be crowded into this space. As a member of the Southern African Customs Union and SADC, we seek to tap into regional capital pools and harmonize frameworks to re-risk investments. And Lesotho is expanding efforts to engage diaspora investors and impact funds through digital platforms, roadshows, and conferences like this one. We believe, as I said, development is for all, and development must be pursued by all. We believe if we join hands with the private sector and look innovatively into developing instruments that cater for the needs of developing countries will be included and will not be left behind, together with their populations, in the quest for global development. I thank you.
Thank you very much, distinguished Minister. Now I will turn to Mr. Mulambo Jaime, Minister of Foreign Affairs. and international cooperation for Zambia. Mr. Minister, Zambia has pioneered the use of innovative financing, including green debt instruments and development-oriented restructuring processes. In your vision, how do you access the ability of innovative finance mechanisms such as this sustainable bonds and debt for nature swaps to attract private investment aligning to the SDG goals in Africa? Please, the floor is yours. 5 minutes.
Thank you very much, and I'll try to be as brief as possible. Co-chairs, Your Excellencies, distinguished panelists, and ladies and gentlemen, let me begin by expressing my appreciation at the opportunity to speak on this crucial subject. From a Zambia perspective, in terms of the question that you have asked, we have set certain priorities, and much like Lesotho, for instance, we are looking to strengthen domestic financial and capital markets. So we take cognizance of the fact that we need to build robust and inclusive domestic capital markets that can mobilize long-term savings and channel them into productive sectors such as energy, agriculture, infrastructure, and digital innovation. So Zambia is reforming its financial architecture to strengthen domestic bond markets, expand digital financial inclusion, and broaden access to finance for MSMEs, especially those led by women and young people. These are engines, really beg pardon, of our economy, and they remain largely underserved. So at the same time, we as Zambia call on development partners and multilateral development banks to invest in capacity building, in de-risking tools and local currency solutions that can help anchor domestic private capital flows to national priorities. Second, we are re-imaging and scaling blended finance. Blended finance must move from pilots to systemic practice, ensuring that it is country-owned, impact-driven, and risk-aligned. In too many cases, the risk-adjusted returns for investors are still not compatible with the needs of our people. We need innovative financial structures, first loss capital, guaranteed platforms, and concessional layers to unlock investment in sectors like climate adaptation, rural infrastructure, and affordable housing. Co-chairs, the global financial system must recognize the value of sustainable investment in developing countries. This includes fair risk assessment, credit enhancement mechanisms, and the appropriate pricing of risk, especially for LDCs and LLDCs. Maybe as I wind up my short intervention, I'd like to further state that Zambia is actively creating an enabling environment by reforming regulatory frameworks, improving macroeconomic stability, and supporting strategic sectors such as energy, where we are targeting over 3,000 megawatts in new renewable energy generation. And of course, agriculture, where we are partnering with private investors to build resilient food systems. But of course, we cannot do it alone. We need partnerships that are just, mutually beneficial, and grounded in the SDGs. We need a new development compact between government, private sector, and global finance, and one that ensures the private sector becomes a fuller partner in our journey to dignity, prosperity, and sustainability. I thank you so very much, co-chairs, Your Excellencies.
Thank you very much, Mr. Minister. Now we'll turn to the Minister of Finance of the Kingdom of Eswatini, New-Richtenburg. In a very straightforward question, Mr. Minister. How is Eswatini building the strategy to engage with private sector in the provision of essential infrastructure, green infrastructure, and services that is hardly needed in the country. Please, the floor is yours.
Thank you, moderator. Thank you to the co-chairs. Right, so we, at the moment, supporting private sector development. It definitely involves creating an enabling environment through policy reforms, infrastructure development, and access to finance, while also fostering entrepreneurship and business linkages. This includes strengthening market functioning and promoting access to finance and encouraging the private sector partnership and public sector, or PPPs in that case, public-private partnerships. So, but what I'll do is, if you don't mind, moderator, I'll give a little bit of a story about Eswatini and about, what we've done in this space. We do definitely believe in, first of all, Eswatini is a lower middle income country, but some of our dynamics mirror developing countries. So we have a high unemployment rate and a high poverty rate in Eswatini. And so, and a bit of our story on how to, and the bottom line is fixing the base rather than trying to do patches on the base. In 2018, we had a good sober look at our country and looked at our dynamics, and we found that we have been in about a 20-year 2% growth place, and with a fiscal deficit of 7.5%. We decided to take a very aggressive view at this, work closely with IMF and even the World Bank on a medium-term fiscal framework to take our fiscal deficit from 7.5% down to 2%, which is very aggressive, very difficult to do. So over the next 3 years, two main budget cycles, but 3 years, we actually reduced expenditure, regardless of inflation, actually took expenditure down in Eswatini, and we worked very hard to increase revenues. And a lot of grace and support involved, we managed to get our fiscal deficit down to 2%. What we then found was that because of the private sector seeing that, the private sector stood up to the plate. And we found in 2023, our growth was 5%, 2024, growth 4.8%, and 2025, it is now looking at 7.9% are the current numbers. So definitely on a very positive trajectory from, we believe, doing the right fiscal thing. A lot of other things we did as well, but one of the main things was getting the fiscal deficit down and for us to get ourselves onto a sustainable path. And when we analyzed that, we found that it was the private sector, obviously, that really came to the party. And a lot of, with the confidence in government doing the right thing from a sustainability point of view, we found that, and it wasn't that much FDI. There's a certain amount of FDI, but it's mainly the bigger companies in the country that went through aggressive growth that took place in Eswatini and helped us to get to the higher numbers. And at the moment, we believe it's going to continue to go in the right direction. And I think that what we then found, is obviously now in 2023, we could now increase expenditure. So since 2023, we've had a double-digit growth in expenditure since then, again, helping us with the growth trajectory, but managed to keep our debt to GDP ratio at 40%. So fortunately, we weren't in too bad a situation to start with, and now on a sustainable path, maintaining the 40%, the growth now allowing us to take on more debt, and the growth allowing us to do all sorts of things, broaden the tax base, do also stuff within our country to be able to make sure that we maintain that path. Last year, got a Moody's upgrade, as you can imagine, with this kind of this kind of things that we were doing, still low, but going from a B3 to a B2. But really wanting to emphasize that in developing countries, there's almost nothing more important than growth. And so, if it doesn't matter what you're getting right. If you don't get growth right, you really are moving the deck chairs in the Titanic. You really are not moving in the right direction. And it's almost like in a bullfight. If you don't remember whatever else you're trying to do to the bull in that bull ring, you've got to make sure the bull doesn't get you, first of all, before you do anything else. And unless we get growth right in our developing countries, whatever else we're getting right, SDGs included, we really are, it's unsustainable. You're not going to get that right. So and again, growth is dependent on crowding the private sector, because if you look at what we're talking about here, if we say we're going to be able to fund ourselves out of this, one can't fund yourself out of this. The MDBs, we're talking of SDGs needing trillions of US dollars. Probably our biggest bank, the World Bank's IBRD fund, is 330 billion US dollars. So what I'm saying is, and we need trillions. We have to bring in the private sector. And until the private sector feels safe and feels comfortable with our macro fiscals, we're just not going to be able to move that needle. And so, Eswatini, what advice we can also give, and as a lot of our governments, even developing countries, have big assets lying idle as governments. So in Eswatini, we're starting a sovereign wealth fund. and just putting, and we don't have the cash to inject it, but we do have a lot of assets that we're going to inject into our sovereign wealth fund and be able to use the sovereign wealth fund then quite strategically to unlock co-investors into the country, try and use it as venture capital, kind of point of the spear, to try and make sure we crowd in with our government assets, liquidate, do whatever the sovereign wealth fund needs to do with it. At the same time, really make sure that we try and develop that sector. Broadening the tax base in Eswatini ever since since 2023, and we haven't increased taxes, but managed to broaden the tax base with more than 1% to GDP every year since then. This year going from 15 to 16%. We're still in the low categories, but it's very difficult to increase taxes when you don't have growth again. Trying to increase tax where there's no growth is very brutal on an economy. So, but you do find when you have the growth, broadening a tax base is a lot easier. So ultimately, the little bit of advice from Eswatini is what we found in our small space is to lead with sustainability. Thank you.
Thank you very much, Minister. Now I'll turn to Mr. Boris Titov, the Special Representative for the President of the Russian Federation. Mr. Boris, on the ongoing global situation, resource mobilization and keeping channels of multilateral cooperation on development is a primary task. Russia is a big player on these issues. From your position as an articulator with international organizations, how do you view a realistic roadmap for countries like Russia to contribute in a partnership with the private sector on financial global public goods and food security, for example? Thank you very much.
Thank you, Antonio. Co-chairs, I'll try to answer your question by providing information about, briefly about two key areas where digital technologies help enhance the role of the private sector in sustainable development, and this what we could share with the whole world and can be the links with our partners in different countries. First, stimulating private ESG investment. Private sector financing of the SDGs remains limited. Sustainable funds account for only 5% of global investment assets, and sustainable bonds represent just 6% of the global debt market. This must change. Russia has developed a practical approach, so-called public business capital, ESG standard. It automatically collects data in real time online from government sources across 74 out of 82 indicators, covering over 7 million companies. Compliant companies gain access to state support, including preferential procurement, subsidies, concessional financing, and other stimulation instruments. The system aligns international ESG standards like GRI, ICCB, SACB with national development goals, making it adaptable to local context. We believe this automated, incentive-based ESG model can benefit other countries, and Russia is open to share it. Strengthening MSME capacity is the second project which we handle now. MSME are vital for jobs, investment, and tax revenue, yet often overlooked. Effective MSME's policy must be based on partnership. The state provides profitable and easy-to-use digital tools, while business operate legally and pay taxes. In Russia, we tackled informality using digital super services, so-called digital platforms, we call them super services, that integrate business registration, banking, credit access, and fiscal reforming. The results, plus 700,000 newly registered MSMEs, 1.5 growth in average revenue per company only in 1 year, 2.8 growth in small and medium businesses with active loans, which is very important for finance. Result for the budget, tax revenue from small and medium businesses nearly doubled. We talk about Russian economy, the revenues from SMEs doubled only, it was plus $119 billion. So you understand what is the financing now of the Russian government. We share this technology with other countries. In Kyrgyzstan, it also gave a result of about doubling the incomes of the Kyrgyzstan budget. So we may share it with other countries. So many member states in this room, we can probably propose it to Lesotho, maybe to Zambia. You said that mostly your SMEs are informal sector. Zambia, maybe in such a developed country as Eswatini. This is what we can share with other countries, and this is our effort. But one more question I will touch, and it's very important for us. Financing development beyond 2030. Bridging the 4 trillion SDGs financing gap is very urgent, but current trends make achieving these goals by 2030 uncertain. We propose designing a realistic post-2030 agenda, starting designing it already now. This means focusing less on ideas of an ideal world and more on a few, but the most important key global challenges that require collective action. New targets should be implemented through concrete programs with clear KPIs, effective governance, pre-agreed resources, including financing. And this work is on the way on international level. The so-called XDGs, X means development goals for the future, which we don't know yet. This initiative is being worked out very efficiently and very active by United Arab Emirates and has brought together experts from over 40 countries. United Arab Emirates, together with Russia, Indonesia, and other BRICS partners, will hold a special session during the UN High-Level Political Forum this July. We invite governments, businesses, civil society, experts to join this very important, as we think, job. Thank you for your attention. Thank you.
Thank you very much. And now we will turn to the lead discussants for this session. For their interventions, 3 minutes each. Turn the floor to Mrs. Mary Beth Goodman, Deputy Secretary General, OECD. The floor is yours.
It is a pleasure to be here with you today to discuss one of the truly defining challenges of our time. How do we unlock the full potential of private finance to meet the scale and the urgency of today's sustainable development, climate, and biodiversity goals? We all know that reigniting global progress, from reducing poverty to tackling climate change and protecting nature, requires urgent, system-wide action. And we know that the emerging markets and developing countries must be at the heart of that response. The scale of the investment needed is massive, and public funds alone won't get us there. Mobilizing private capital is essential, yet despite growing investor interest, we remain far from the scale required. To make progress, we need decisive action in 3 interconnected areas. First, building trust through transparency. Investors shy away from the EMDEs, partly because the data isn't giving them the full picture. There's a gap on investment risk, returns, and actual performance. And while development finance is mobilizing private capital, the data isn't always disclosed at the transaction level. This lack of granularity inflates the perceived risk and it undermines policymaking. So let's work to close the data gap and use the new collective quantified goal on climate finance as an opportunity to improve the availability and transparency of the climate finance data. Second, putting private finance mobilization at the core of development finance. Blended finance results have been mixed. Some instruments, like the guarantees, have been very effective in mobilizing private finance, but overall, the numbers have not lived up to expectations. In 2023, less than 1/5 of development finance interventions had private finance mobilization at the core, and only 70% of private finance was mobilized. This is tiny compared to the annual investment needs. Third, let's tackle policy and regulatory barriers. EMDBs face real and perceived investment risk, from shallow capital to non-transparent bureaucratic policy environment for investment. This requires technical assistance from the international organizations, the MDBs, and donors to help financial authorities build capacity and strengthen local green financial markets. But constraints also come from advanced economies through financial regulation that could unintentionally constrain investment in capital-intensive projects in the MDEs. We need coordinated reform at home and internationally to unlock the scale of capital required with the active involvement and cooperation of MDBEs and donors. At the OECD, we're very proud to help in this endeavor. Our job is to make sure more of it flows, more of this money flows. It is out there, but we need to get it where it's needed most. Thank you very much.
Thank you very much, Ms. Goodman. Now we'll turn to Mr. Eric Belofsky, Vice President, Rockefeller Foundation.
Thank you, Antonio. Thank you, co-chairs, and thank you to all the governments and non-governmental representatives present today. The Sevilla commitment offers a strong framework for sustainable development, and if implemented, will help advance the economic future of many developing countries around the world. That doesn't change the fact that investors have basic needs when making investments, particularly in countries where the need is greatest. It's about creating the right conditions so private capital can flow at scale. First, strengthening domestic financial and capital markets is critical. A robust local financial system is the foundation for attracting both domestic and international investment. Without strong banks and functioning capital markets and supportive regulatory frameworks, even the most promising projects can struggle to secure financing. At the Rockefeller Foundation, we emphasize building these foundational capabilities. That means supporting efforts for financial inclusion, regulatory oversight, and financial instruments. For instance, through YieldWise, the initiative in East Africa, smallholder farmers, many of whom are women, have gained better access to affordable financing through a partnership between local banks and fintech companies to develop tailored loan products and credit scoring models. Second, creating enabling environments with clear, stable policies and incentives is required for sustainable investment. Investors need predictability, consistency, and transparency. This means clear policies not only on financial regulations, but also on environmental and governance standards and fair competition. A great example of this is in the work of the Global Energy Alliance for People and Planet on the World Bank and AFDB's Mission 300, where by improving local skills and capacity and implementation efforts, it is supporting African governments, institutional partners, and businesses with new financial tools and bankable projects. At the same time, the energy compacts that are at the heart of Mission 300 include concrete reform commitments by African governments to connect more people to electricity, keep costs down, and boost reliability. Third, scaling up resources available for private-public partnerships is vital to driving impact. The SDG investment gap is enormous, and the debt burdens faced by some developing countries is very steep. As we know from UNCTAD, Today, 3.4 billion people live in countries that spend more on interest than on health and education. At Rockefeller, we use philanthropic risk capital and risk diplomacy to pilot innovative instruments, spur investor confidence, build like-minded coalitions, and expand resources in MDBs. As a result, this helps build confidence among investors. One great example is the Emerging Markets Transition Debt Facility. Under this initiative, institutional investors, the holy grail of private money, have committed to invest $400 million in the energy transition in emerging markets. To effectively crowd in private resources, mechanisms like blended finance, risk-sharing instruments, and climate risk insurance are necessary. Furthermore, the MDBs are key players in driving sustainable development outcomes. There are new and expanding opportunities for the private sector to partner with them to promote investments. On that note, the Rockefeller Foundation has supported a very central effort to reform the capital adequacy frameworks that determine how much leverage the banks can use out of their existing funds. This effort has added considerable funding to the global MDB system. Recently, in the face of tremendous ODA cuts, we proposed a modest but impactful adjustment to the World Bank's equity-to-loan ratio, reducing it by just 1 percentage point. This change could unlock an additional $30 to $40 billion in lending capacity, enabling the bank to deploy more funds towards sustainable development without increasing risk to taxpayers or shareholders. Together, by employing these public, private, and philanthropic resources more effectively, we can close the investment gap, drive sustainable development, and ensure that no one is left behind. Many thanks.
Thank you very much, Mr. Pawlowski. Now I turn back to the co-chairs. Christopher Mohammed, please.
I would like to thank Mr. Silveira for expertly guiding the discussion. I also thank our distinguished panelists and discussants for their substantive contributions. Excellencies, distinguished delegates, we will now listen to interventions from the participants in the roundtable. In order to maximize the time available to us and allow as many participants as possible to take the floor, I would urge all speakers to kindly observe the time limit of 3 minutes for interventions. To assist speakers in this regard, a timer has been installed. When the clock signifies that the 3 minutes have been exhausted, speakers are kindly requested to conclude their statements. In accordance with the agreed modalities, the microphone will be deactivated 30 seconds after the allotted time has elapsed. I apologize in advance if speakers are cut off. As delegations have been informed due to high interest in the roundtable, we unfortunately have to resort to these measures to hear from as many speakers as possible in the limited time available. Thank you in advance for your understanding. In adhering to the time limit of 3 minutes, I would like to appeal to speakers to deliver their statements at a normal speed so that interpretation may be provided properly. Delegations wishing to make interventions and who have not previously indicated their intention to do so are kindly requested to approach the Secretariat in the room. Having said that, I now open the floor for interventions in the roundtable. We will start with Mozambique. His Excellency Daniel Francisco Chapo, President of the Republic of Mozambique.
Thanks so much. Excelentíssimo Senhor Presidente, distintos chefes de Estado e de Governo, estimados ministros e representantes de organizações internacionais, ilustres participantes, minhas senhoras e meus senhores. É com um forte sentido de oportunidade que participamos nesta mesa redonda, cujo tema é alavancar as empresas e o financiamento privado. É de uma importância e ressoa profundamente com as prioridades de desenvolvimento de Moçambique. Queremos desde já felicitar ao Sr. Presidente pela eleição e expressar a nossa gratidão pela honra de poder partilhar a nossa perspectiva e visão neste destino, ou melhor, distinto fórum. Distintos participantes, a Jornada de Desenvolvimento de Moçambique, tal como de muitas outras nações em desenvolvimento, é ambiciosa e repleta de potencial, mas também enfrenta desafios estruturais significativos. A nossa agenda nacional visa a transformação econômica, a redução da pobreza, a criação de empregos dignos, principalmente para a juventude, e a construção de infraestruturas resilientes, tudo isto alinhado com os Objetivos de Desenvolvimento Sustentável. É inegável que o financiamento público, por si só, é insuficiente para colmatar a vasta lacuna de investimento necessário para alcançar estas metas. É aqui que o financiamento privado emerge, não apenas como um complemento, mas como um imperativo estratégico. Reconhecemos que o setor privado é o motor de inovação, de crescimento e de criação de valor. Para nós, em Moçambique, alavancar as empresas e o investimento privado não é uma opção, mas uma condição essencial para impulsionar o nosso desenvolvimento de forma acelerada e sustentável. Por isso, entendemos que o financiamento privado deve procurar estabelecer soluções adequadas e orientadas e outros. O estímulo ao desenvolvimento do empreendedorismo, a inovação, internacionalização e mobilidade das empresas, por exemplo, a Zona de Comércio Livre Continental Africana, que dispõe de 1,4 bilhões de consumidores e que vai permitir, até 2045, o aumento substancial do comércio interafricano. Por isso, para nós, é importante o fortalecimento de governação e transparência, reforma do quadro legal, promoção do conteúdo local e o desenvolvimento de mecanismos de financiamento inovadores. Muito obrigado a todos.
Thank you very much. I would now like to turn to Her Excellency Gordana Dimitrievska Kochosko, Minister of Finance of North Macedonia.
Excellencies, distinguished delegates, esteemed colleagues, it's a great honor to address this distinguished gathering today. We are united by a shared purpose to accelerate sustainable development through innovative financing. I'm here to share our country's experience in leveraging blended finance and strategic partnership to address two of the most urgent challenges of our time: air pollution and climate change. In response to these challenges, our country has launched the Green Finance Facility, or GFF, an innovative financing mechanism designed to unlock affordable green finance for small and medium-sized enterprises and underserved households. The GFF is more than a financial tool. It's a catalyst for transformation, empowering businesses and communities to invest in renewable energy and energy efficiency solutions that reduce emissions, lower energy costs, and improve public health. At the heart of the GFF lies a blended finance model. By combining public and private capital, technical assistance, and performance-based incentives, we have created a structure that mitigates risk, attracts private investments, and ensures that no one is left behind in the green transition. This model enables us to direct capital where it is most needed, towards climate-smart investments that are inclusive, impactful, and scalable. The success of the GFF is built on strong and diverse partnership. We are proud to collaborate with the United Nations, Joint SDG Fund, UNDP, the European Bank for Reconstruction and Development, and a network of local financial institutions, including 5 banks and 1 leasing company. Together with the government, these partners bring not only financial resources, but also technical expertise, policy coherence, and a shared commitment to sustainable development. The GFF is structured around 2 core components. The first supports SMS in adopting renewable energy and energy efficiency technologies. The second targets underserved households, including Roma families, female-headed households, single parents, persons with disabilities, and returns from abroad, ensuring that the green transition is just and equitable. The mentioned projects are estimated to deliver annual energy savings, avoid emissions, and new renewable capacity. These investments have also led to measurable reduction in fine particle pollution, PM2.5 and PM10, contributing to cleaner air and healthier communities. The Green Finance Facility demonstrates that blended finance, when paired with inclusive design and stroke partnership, can deliver tangible environmental, social, and economic benefits. In closing, I reaffirm our country's solid and steady commitment to the 2030 Agenda and the Paris Agreement. Let us continue to work together to build a greener, fairer, and more resilient world for current and future generations. Thank you.
Thank you very much. I would now like to turn to His Excellency Gordan Grlic Radman, Minister of Foreign and European Affairs of Croatia.
Excellencies, dear colleagues, distinguished guests, I'm pleased to be here today to add Croatia's perspective to this important and timely discussion. To meet the sustainable development goals, we need the private sector not just as a source of funding, but as a partner in building more resilient societies. In Croatia, we have seen the value of private investment in areas like energy infrastructure, tourism, and technology. We have also learned how important it is to create a stable business environment and build trust between government and investors. But more can be done. We must work to better connect private capital with public needs, for example, in clean energy, digital transformation, and education. We need to support small and medium-sized enterprises, especially those led by women and young people. And we must make sure that investments are responsible, that they respect people, the environment, and the rule of law. Regarding the reform of global financial architecture, the emphasis should be on the importance of lowering the cost of capital and exploring new collective instruments to finance sustainable development. Croatia is also an active member state of the European Union, which today we are celebrating just 12 years of our accession, which promotes sustainable finance and partnership through instruments like Global Gateway and InvestEU. We believe these models can help other countries as well, especially in regions that need more private investment for development. Ladies and gentlemen, the private sector is not separate from development, it is part of it. At a time of growing complexity and volatility in the global arena, it is critical that we continue a transparent dialogue and joint initiatives with private and public finances. I'd like to draw your attention to the document prepared by Finance in Common, Unlocking the Potential of Public Banks for Sustainable Development, which is an excellent contribution to our discussion. This document has been facilitated with great support from the International Development Finance Club, of which the Croatian Bank for Reconstruction and Development, a bank from my country, Croatia, is also a member. Thank you.
Thank you very much. I would now like to turn to His Excellency Matia Kasaija, Minister of Finance, Planning and Economic Development of Uganda.
Your Excellencies, distinguished participants, Uganda recognizes that the financing gap is huge and official development assistance will never be enough to close the deficit. We therefore propose that part of the development finance from multilateral financial institutions and development financial institutions should be utilized to leverage private capital by de-risking private sources of finance. Innovative financing sources such as debt swaps for nature, green bonds, sukuk bonds, PPPs, crowdfunding, etc. offer opportunities to supplement traditional financing sources. However, capacities need to be enhanced to quickly come up with effective delivery frameworks that provide quick and sustainable financing without constraining conditions. We need capacity and financial support to access innovative sources of development finance, such as diaspora bonds, infrastructure bonds, municipal bonds, Islamic finance, green bonds, to diversify development finance as well as non-public debt financing solutions, and to leverage private equity, especially for the infrastructure development. The cost of accessing non-concessional financing and private equity is very high. For example, in PPE structures, all the risks are on the government, while all the benefits go to other parties. We need frameworks that balance risk sharing and minimize these costs to governments. We support the need to develop an enabling policy environment which facilitates private investment in agriculture and food systems, and a renewed global framework for improved access to additional and innovative financial resources to close the growing financing gap in infrastructure, in agriculture, and other areas. We support the renewed focus on micro, small, and medium enterprises, and the support to cooperatives to increase productivity, resilience, and sustainable growth through automation, access to affordable finance, and skills development. Thank you.
Thank you very much. I would now like to turn to Her Excellency Nadia Fattah, Minister of Economy and Finance of Morocco.
Thank you very much, Excellencies, ladies and gentlemen. In Morocco, we have a clear target to have private investment represent 2/3 of the investment of the country by 2035. So first, we are reforming and working constantly to keep the house in order, having a good trajectory of public finance and a good growth trajectory. We are easing the life of the private business by a modern regulatory framework, visibility and midterm predictability on tax reform, good infrastructure, including ports, airports, green energy, and strong human capital. We also have very comprehensive business and economic strategies to allow integration in the global value chains, from access to market to technology, human capital, and our success in automotive industry exporting 700,000 cars is a good example for this. To finance this, we have a strong financial market, not only banking sector, but also strong capital markets, crowdfunding, other solutions for SMEs, and also a strong guarantee system and a sovereign wealth fund. But challenges are remaining. We just issued in March Eurobonds, $2 billion, without having investment grade. But we had a good price as a sovereign, I would say, bonds. But for private sector, not having the proper ratings, not having the proper risk assessment, don't allow the private sector locally or foreign investors to have access to the proper or the good pricing for the finance. We're talking also about blended finance. I won't repeat what my fellow colleagues have been saying, but we need also blended finance, because to have investment at scale, we cannot have just financing project by project. For renewables in Morocco, all the production now is private, but governments still need to invest in grid, in, I would say, technology. So we need much more money, and you've been all speaking about this, but we need also this PPP strategy that we are all promoting to be also supported by blended finance. And finally, we have some private equity firm here. We're talking about MDBs, we're talking about concessional, but we need the real money to flow to Africa. We really have very, very small amount of this coming to us. Thank you so much.
I would like to now give the floor to International Chamber of Commerce.
Thank you for the opportunity to address you today. Can I be clear? The International Chamber of Commerce did not bring thousands of business people to this conference to listen to more pledges and to listen to more declarations. We came here looking for, and we want, serious enabling action to allow the private sector to do its bit in order to enable finance for development. And that can only be done through genuine partnership and through creating, as the Minister just said, enabling environments. Friends, we are the institutional voice of more than 45 million businesses. We operate in more than 170 countries. 70% of the ICC is in developing and emerging economies. This is a real issue for the International Chamber of Commerce, and we are here to ensure that we do something about it. We like and we welcome the Compromiso de Sevilla, not because it solves everything, but because it contains proposals that, if used effectively, might just unlock real structural change. We want to do more, but let's be also clear, as the Minister just said, the path to mobilizing trillions remains blocked by systemic issues. Let's take financial regulation. Under current Basel III framework, banks are disincentivized from financing development climate projects in emerging markets, even when backed by multilateral guarantees or long-term offtake agreements. This isn't just a theoretical issue, this is a real-time, real-world bottleneck. We have identified targeted adjustments that can be made to unlock up to 4 times more bank capital for sustainable investments without compromising stability. Second, we must work together to build functioning capital markets in developing economies. We need to be able to mobilize capital with legal certainty, institutional capacity, and fair rules. Friends, we have the playbook. We want help to actually ensure that this is delivered. And in the context of declining aid budgets, we need governments to think strategically about how to enable these very local businesses, as the Russian delegate said, to become drivers of development. Redirecting development assistance, what that remains of development assistance, towards building private sector capacity, infrastructure, and aid for trade is critical. But let's be clear, that's just the beginning. 2 hidden barriers deserve urgent attention. The first is access to finance. Trade finance supports 80% of global trade, yet from 2011 to 2022, we have seen a 25% drop in correspondent banking relationships, up to 60% in Africa, up to 60% in the Caribbean. What's the result? SMEs are losing up to 40% of revenue within 2 years. We must fix this. We must restore the global correspondent banking network to 2011 levels. This will increase monies available by up to $300 billion a year. And it starts with ensuring that the Financial Action Task Force, which is actually, the introduction of which has actually led to this diminution because of risk and retrenchment, to be effectively operating, and that ensures that they understand the unintended consequences. The number is too big to ignore, and there has to be more proportionate implementation of FATF standards to stop.
Yeah. Before we listen to the next speaker, I think it's a quick reminder to the representatives to kindly observe the stipulated time limit of 3 minutes so that we may listen to as many speakers as possible in the time available. I'd like to give the floor to Mr. Sigitas Mitkus, Vice Minister of Foreign Affairs of Lithuania.
Thank you, Chair. Dear Excellencies, honorary guests, ladies and gentlemen, the financial gap needed to fund the SDGs is huge. Everyone expects the private sector to invest and provide innovative solutions, which would be important drivers of sustainable development, economic growth, digital transition, and job creation. From the government side, there is an urgent need for timely political, administrative, and legal decisions to engage the private sector in the financial architecture of development at both the national and global levels. In Lithuania, we have decided to establish a coordination mechanism comprised of representatives from businesses, public institutions, and financial institutions. On the basis of PPP principles, we have created green finance institutes. Lithuania was among the first countries in Europe that issued green bonds. And Can you hear me? Yes. Lithuania was among the first countries in Europe which issued green bonds and introduced bespoke regimes for crowdfunding in financial and energy sectors. This enhanced coordination mechanism provides us with the opportunity to, first, to identify the needs of the private sector, second, to strengthen cross-sectoral links. In this respect, Lithuania, as a country of advanced e-governance, digital finance, and fintech, benefits greatly from these institutional decisions. Public procurement is yet another theme to be explored when we are talking about redirecting public financial resources towards implementation of SDG objectives. Third, the enhanced coordination allows us to adjust existing financial instruments, such as export credits and export guarantees, and create new ones, such as sustainable bonds and green guarantees, mixed funds. It also enables us to employ risk-sharing mechanisms to expand financial capacities and finance development cooperation initiatives. We do believe that these measures will improve the private sector's engagement in the financial architecture of development cooperation. Thank you.
Thank you. I give the floor to His Excellency Nestor Ntahontu, Minister of Finance, Budget and Development Economy of Burundi.
Merci, Monsieur le Président, Excellences, Mesdames, Messieurs, distingués participants. Aujourd'hui, plus que jamais, il est largement reconnu que la mobilisation du secteur privé, à la fois national qu'international, constitue un levier essentiel pour atteindre les objectifs de développement durable. Dans ce contexte, le Burundi souhaite partager quelques éléments de réflexion fondés sur son expérience et ses priorités. L'implication accrue des entreprises privées dans le financement du développement suppose la mise en place d'un environnement propice, transparent et prévisible. À cet égard, des efforts soutenus sont engagés au niveau national afin de renforcer le cadre juridique des partenariats publics et privés, d'améliorer l'accès au financement pour les petites et moyennes entreprises et promouvoir l'inclusion financière, notamment la digitalisation des services et la promotion de l'accès des crédits aux femmes et aux jeunes. La mise en œuvre de mécanismes tels que le fonds de garantie de guichet unique pour les investisseurs ou encore l'accompagnement technique des entreprises vise à faciliter la création du tissu économique dynamique, inclusif et résilient. Une attention particulière est portée aux femmes, aux jeunes, des catégories qui ont des banques que leur sont spécifiques et dédiées et aux acteurs du secteur informel en voie de formation. Sur le plan international, une mobilisation plus structurée des investissements privés demeure souhaitable. Cela implique notamment le renforcement des instruments de partage des risques, de la promotion du financement mixte et de l'alignement des flux financiers sur les priorités nationales du développement durable. Le Burundi souligne ici l'importance d'une gouvernance renforcée des investissements à travers des cadres transparents et une évaluation rigoureuse de l'impact social, économique et environnemental, ainsi que le dialogue permanent entre les acteurs publics, privés et partenaires au développement. Dans cet esprit, le Burundi réaffirme sa disponibilité à œuvrer avec l'ensemble des parties prenantes pour l'entreprise et le financement privé devienne un catalyseur effectif du développement durable à même de changer positivement la vie de nos populations. Je vous remercie.
Thank you. I give the floor to Ms. Diana Janse, State Secretary to Minister for International Development Cooperation and Foreign Trade of Sweden.
Excellencies, colleagues, we meet here in Sevilla to ensure that the development financing agenda is up to date and fit for purpose to, despite the storms around us, accelerate the implementation of the SDGs. And I'm pleased to see that the Seville commitment emphasizes mobilizing additional funding, both from the private sector and domestic resources. ODA, however important, will not, cannot, and should not be the only solution. My government works to strengthen the synergies between development cooperation and trade promotion. By coordinating our efforts, ODA acts as a catalyst, mobilizing additional private resources for sustainable development, digital and green transition. We know it can be done. Through innovative instruments and partnership, Sweden has successfully mobilized private capital for sustainable development for nearly 15 years. Through credit guarantees, we reduce financial risks for private investors and challenge funds to co-finance innovative solutions. These efforts have attracted significant private investments in sectors like infrastructure, environment, climate, and gender equality, mobilizing over $3.5 billion by the end of 2024. However, investors remind us that for this approach to work with additional private funding, strong institutions, rule of law, and anti-corruption measures are crucial. Corruption hinders development, as do tax evasion, money laundering, and organized crimes, with enormous sums lost to illicit financial flows. Ultimately, every government is responsible for their own development and for ensuring these fundamental conditions for investments and economic development. It's obvious, and it has been said here on numerous occasions at the conference, private capital goes where opportunities grow. It is for countries to create these opportunities through reforms, bold reforms that we are willing to support. We hope that the Sevilla commitment will be a starting point for more actors to join in this quest for additional opportunities. I thank you for your attention.
Thank you. I give the floor to His Excellency Sergio Armando Cusiganqui Loaiza, Minister of Development Planning of the plurinational state of Bolivia.
Muchas gracias. Muy buenos días a todos. En primera instancia, queremos señalar que la lucha contra la pobreza y la desigualdad son temas y preocupaciones que representan una coincidencia entre los países y que nos unen en los esfuerzos. El mejorar las condiciones de vida de nuestros pueblos representan necesidades de financiamiento enormes. Los esfuerzos del sector público de mi país y de la gran mayoría de los países presentes en este foro son importantes, pero insuficientes debido a las grandes necesidades sociales que tienen nuestros pueblos. Y es ahí donde los gobiernos y nuestros países entran en algunas contradicciones. Por ejemplo, una contradicción es tener que definir entre atender las necesidades de la gente o reducir el déficit fiscal, o como señalaban anteriormente, la disyuntiva entre pagar la deuda pública o resolver los problemas de la gente, por ejemplo, atendiendo la dotación de agua potable. En este contexto, es importante pensar en la movilización de recursos, tanto públicos como privados. Sin embargo, hay que ser conscientes de que la movilización de recursos públicos no llegará a todos los sectores y, por lo tanto, no resolverá todos los problemas de la gente. Porque la movilización de recursos privados tiene por detrás y como un supuesto muy grande el poder conseguir una tasa de ganancia. Y es por eso que, además de la movilización de recursos privados, es fundamental también la movilización de recursos públicos y el cambio de la actual arquitectura financiera. En ese marco es fundamental que, además de hablar de la movilización de recursos privados, se logre conseguir esta reconstrucción de la arquitectura del sistema financiero internacional para poder movilizar recursos financieros y resolver los problemas de la gente. Las decisiones de aquí en adelante no solamente tienen que ser en el ámbito financiero, sino fundamentalmente pensando en que tenemos el compromiso de resolver los problemas de nuestros pueblos hacia futuro. Muchas gracias.
Thank you very much. I now give the floor to Ms. Heidi Rambutz, Vice Minister for Development Cooperation and Humanitarian Affairs of Belgium.
Thank you very much. Excellencies and distinguished colleagues, at a time of growing global uncertainty from climate disruption to rising inequalities and from health crisis to economic fragility, our response must be rooted in high-quality, mutual beneficial partnerships. We must invest in our common future, in those global public goods we all depend on: climate, health, and stability. And so this forum and this session is really important to us to really see how to better leverage private finance and business for sustainable development. The Compromiso de Sevilla, which was adopted, offers a timely and ambitious roadmap. Three elements that I want to underscore from our perspective. First of all, we believe that mobilizing private finance and business must be rooted in capital and national priorities and needs. National leadership and ownership is critical in mobilizing private finance for sustainable development. Therefore, we plead for strong coordination and leadership at national level with specific attention for the local private sector. Second, there are indeed increasingly financial tools available, and they all must be used wisely. Not only do they need to support national priorities, but we also need to understand how they are used so that they will not come at distorting markets. We need to place the cursor right between the continuum of, on the one hand, being less risk-averse with our instruments and with, for example, our MDBs, but on the other hand, also capturing risks and de-risking. And getting that cursor right on that continuum is critical to understand where we rightly will mobilize private capital. And finally, ultimately, prosperity is about people. And so we therefore also plead for a human-centered private business and finance approach. We have good examples, for example, in health, where indeed we bring together technology, vaccine production, transfer of technology, skills development, so that we can build to be stronger together for future pandemics. Thank you very much.
Thank you to the representative of Belgium. I now give the floor to the distinguished representative for the International Fund for Agricultural Development.
Thank you so much, Mr. Chair. IFAD welcomes the emphasis that the Compromiso de Sevilla puts in the role that private investment plays in enhancing rural economies. Investing in rural areas is critical to provide opportunities to the world's poorest, stabilizing the food supply, the global food supply, and expanding economic opportunities for all. The private sector is by far the largest player in food system, and aiming for transformation without it has low chances of success. The private sector provides skills, knowledge, and innovation that can help farmers escape poverty, and that they are not necessarily provided by governments. Let me take the example of digital information solutions. Agri-SMEs are the engine of inclusive growth. Engaging millions of rural people in productive employment and strengthening food system from the ground up is imperative. And we need to create rural jobs. We need to tackle migration, but we can't tackle migration if we don't provide in the rural space millions of opportunities for young people. We need to make private capital work for rural development, but how do we do it? And what has not worked so far in the last decade? We need appropriate sites of bankable projects and scalable. We need tailored technical assistance, and we need to address country and sectoral risks, which translated into higher prices by developing risk-sharing and blended finance instruments. And IFED, we are committed to do this. We are developing a new work stream. We are getting ready to become a critical partner for the private sector. And we aim to strengthen inclusive and sustainable private sector ecosystem, particularly rural, micro, small, and medium-sized enterprises. But we need partners and we need partnerships with both public sectors, governments, and the private sector. Thank you so much.
I thank the representative of IFAD. I now give the floor to Mr. Hussein Husianov, Head of the Sustainable Development and Social Policy Department of the Ministry of Economy and Secretary of the National Coordination Council for Sustainable Development of Azerbaijan.
Thank you, Mr. Chair. Sufficient financing remains a critical challenge for progress toward 2030 agenda. It's estimated that investment requirement to achieve SDGs still increased by 2.5 trillion per year during the period of time 2015 and 30. To bridge potential financial gaps in funding SDGs, Azerbaijan has utilized Integrated National Financial Framework, INFF, and SDG Investor Map, relying on domestic resources. Embracing SDG investing is a mechanism for driving positive social and environmental change. We are proud to announce that 82% of our consolidated budget expenditure align with national SDG goals and targets, which constituting almost 25% of GDP. In our recently submitted fourth voluntary national review, were outlined comprehensive measures implemented by government of Azerbaijan, close to a SDG financial gap. In 2025 publication of the United Nations Department of Economic and Social Affairs dedicated to the preparation of VNRs, the innovative approach implemented by our country in financing implementation of SDG have been positively evaluated and recommended to other member states. Dear foreign participant, it's worth to note that effective institutional settings relating to the PPP projects are also crucial for financing development projects. In order to ease the financial burden on state-owned infrastructure projects, as well as accelerate the attraction of strategic foreign investment to the country, public-private partnership regulations based on best practices were developed and adopted last year according with law on public-private partnership. Ladies and gentlemen, as you are aware, Azerbaijan successfully hosted COP29 in November 2024. The core of discussion was centered around establishing new collective quantified goals for climate finance, with the key outcomes being agreement of new financial goal to support developing countries in addressing climate change. The Baku Finance Goal emphasized the importance of both public and private finance in achieving overall targets. The Baku Finance Goals in target at least 300 billion per year by 2035, tripling the previous 100 billion target. Ladies and gentlemen, in conclusion, I believe that Fourth International Conference on Finance Development offers a critical platform to make adjustment needed to accelerate progress towards SDGs and driving ambitious reform, ensuring affordable long-term financing. I thank you.
I thank the distinguished representative of Azerbaijan. And now I'd like to give the floor to Her Excellency Fatima Haram Hassil, Minister in charge of the Economy, Planning and International Cooperation of Chad.
Merci beaucoup, Monsieur le Président des séances, Monsieur le chef d'État, Monsieur le chef de gouvernement et de délégation, distingués participants. Le Tchad, pays moins avancé, dispose d'un potentiel important pour mobiliser le secteur privé de sa part géographique et aussi de ses matières premières. Afin de transformer ce potentiel, le gouvernement a développé un plan national de développement ambitieux 2025-2030 appelé Tchad Connection 2030, où 46% des projets sont éligibles au financement du secteur privé. Le gouvernement a aussi entrepris des réformes audacieuses, notamment à travers la digitalisation des services fiscaux et l'amélioration des climats des affaires. On parle de la simplification des procédures administratives, la stabilité réglementaire, la sécurité juridique, les incitations fiscales. Développer une stratégie pour inciter les PME et les start-up, les pôles d'innovation. Aussi une stratégie pour faciliter les partenariats publics et privés dans le secteur clé et stimuler les investissements directs et étrangers. Le Tchad fait appel pour un accès juste et équitable à la finance publique, pour le renforcement du mécanisme de financement mixte en impliquant les banques de développement et aussi le secteur privé, d'adapter les outils d'investissement aux réalités des pays les moins avancés et aussi la prise de risque partagée, les incitations ciblées, etc., et l'augmentation du montant de l'aide publique au développement à destination du secteur privé. I thank you.
Je remercie la ministre de Tchad. I would now like to give the floor to His Excellency Abbas Karam Obaid, Deputy Permanent Representative for Iraq, speaking on behalf of the Group of 77 and China.
Thank you, Mr. Co-Chair. Excellencies, distinguished delegates, I have the honor to deliver this intervention on behalf of the Group 77 and China. The group notes that, in comparison to the Addis Ababa Action Agenda, the chapter on domestic and international private business and finance of the Compromiso de Sevilla has concrete calls to action, in particular in paragraph 33A(f), of increasing foreign direct investment in developing countries to support national development priorities and the SDGs, including through